Good afternoon. Thank you for joining us. We are coming to you with a brief update here in the beginning of tax season. Just a few things to think about as you're pulling information together. Well, it is now the beginning of February and we're still excited and energized. It's the beginning of tax season. We've enjoyed being able to see the few that have already come in and looking forward to seeing many, many more of you as you pull your information together. It's nice to be back in a more of a routine tax season here versus coming for the last couple years where it seems like we're having so much new information that we're just trying to keep up. This year we're actually really able to spend a lot of time focusing on what's coming ahead, just more of the looking back a little bit and kind of just really pulling it all together, which is very nice and a good opportunity for us as well. A couple of things to think about as we look into this tax season. As you're bringing information in, don't forget that texts and emails aren't secure. I'm not saying you can't send us information that way, we do accept it, but just be aware that if you have your social security number on that, it's not secure to text or email things. We have links in all of our emails and on our website to be able to send us information securely, so I would strongly recommend that you use that as a method to send us information. You're always welcome to drop information off as you pull them together. I always joke, just keep a folder and put anything that's tax-ish in that folder and drop it off. Susan and Lori at the front desk are here on a pretty regular basis. We are actually a very regular basis. We are here from 7:30 in the morning until 5:30 at night, at least, if not more than that during tax season here. So feel free to stop by, email, anything like that. Susan and Lori did ask me to let you know that as you pull in information together, try not to staple it together. If it's stapled already, you don't have to take the staples out, but we end up taking it and taking your information and make it electronic. So if you staple it together on behalf of us, it actually just takes us a little bit longer to unstaple things. If you want to do it as an ease for you to keep information together, that's fine, but don't do it on our behalf because it does make the process a little bit longer for us when we take it in and scan it in our work papers. Coming up here very shortly, way faster than many of people think about, is that the sales in use, so the Michigan sales in use and the local personal property tax returns, if you have those, are due. Those are both business returns. So if you don't have a business, don't worry about them. But if you have a business and you're looking at the April or the March 15th deadline, actually one of the bigger deadlines that we have here is in February here. That pushes us to really get you and ask you things. So if we haven't reached out for you, please let us know, especially if you have a business here. We should be connecting and getting those in very soon. The personal property tax return or the exemption, if you have not filed one of those, are very important that if you get those in, you have to get those in time, otherwise they don't qualify. If you're thinking about electing an S corporation, this is something that we would have been talking about with you during the year, but if you're a startup entity and looking at switching to an S corporation, in order to do the timely filed return that's due March 15th, make sure you put that on your schedule as well. We are seeing an increase actually in sales in use tax audits and workers' compensation audits that are coming through right now. We're also seeing some of on the federal side, some compliance items. What we're seeing here actually is that this is a way for the state and federal government to put the individuals that they have now recently hired to work and finding information and finding and accumulated more dollars for them. And by doing it in the sales tax and the workers' comp and then some of the other non-compliance items, it's a way that they can generate revenue without increasing taxes, because what they're doing is they're going back and looking at things that should have been done all along. We're seeing an increase of inquiries related to that. Many times the information is correct. We just have to respond to those that they're asking for. But one thing particular that the state of Michigan is really pushing on is making sure that you're timely filing your deposits for sales tax. Whereas some businesses in the past may have pushed them together maybe on a quarterly basis versus a monthly basis, and they would have waited till later to catch up for that. The state is really looking at those, and so make sure you know whether you're a monthly filer, a quarterly filer, or even a biweekly filer. They're really pushing that timely submission on those throughout the year, so just make sure you're aware of that. Hitting the news recently, and it's been around for a while now in the media, is the Secure 2.0. I'm not going to go into a lot of detail on this because I'm actually going to spend a fair amount of time come after this tax season to bring you information, because most of the that relates to Secure 2.0 is actually starting in 2023, the tax year of 2023, so we won't have to be worrying about it too much until then, and it even spans into 24 and 25. So you should be hearing more information about this. Make sure on this, there's a couple items though I want to make sure I hit right now. So on the Secure 2.0, what you should be doing about now, so not waiting until later, is one, talk to your financial planner to see if there's anything that you should be thinking about. It pushed back RMDs, it pushed back a few other items, but there are also some planning strategies that you might be able to use. One of the things I'm really excited about that's inside of the Secure 2.0 is the ability to have a Roth simple IRA. Now, it's true that that's not in place until it's effective for 2023, so from a tax point of view, it's not going to really impact us until later. What does impact us now is if you're making regular contributions through your wages. Well, we get paid every week or every other week. You're going to want to make sure you set those up. The financial institutions are still just figuring this all out. It was brand new, but that's something that if you think that a Roth simple IRA might make sense, give me a call, talk to your financial advisor. I'm super excited about these and the potential of what they can offer for many of our clients. But as I mentioned, I'm not going into too much detail on the Secure 2.0 right now. We will do that in much more depth going forward. Lastly, and this is again a little bit of a tax planning strategy and tip here, as you're filing your kids' tax returns. We do some returns for those, but many of you file your own returns with the kids. Use that as a great opportunity to consider whether or not you should fund a Roth IRA for your kids. It's a more advanced tax planning tip or strategy. Don't hesitate to call me or Jeff or Jim or Tasha or anyone here if you have questions on that. It's a really cool opportunity that you can use the earnings that they have as younger individuals, maybe the 15, 16, 17-year-old, and you can really strategize within that and really take advantage of the long time that they're going to have to be able to save and at the very low tax rates that they are. A great strategy to really be utilizing. So as you're filing your tax returns, think about that and use this as an opportunity. Well, we wish you a happy Valentine's, a great week this week, and we look forward to talking with you soon.